According to these two macro charts, on a higher time frame, Bitcoin is still looking strong. What will it take for Bitcoin to enter a new downtrend? What is a short-term price action looking like? And what are future potential targets for Bitcoin on the macro scale? These are questions we're going to be answering today. Let's dive into the video. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. In today's video, we're going to be running a complete high time frame momentum analysis for Bitcoin, discussing two major technical indicators and technical charts on the weekly chart that are suggesting the uptrend is still intact and is still strong. We'll also be going over the smaller time frame price action, discussing the current horizontal range, the outcome of this range, and what we expect moving forward. And finally, we're going to be talking about the macro trend and what it will specifically take for the bears to take control and push Bitcoin into a new downtrend. Before we get into it, smash the like button, hit the comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, data, technical and structural information, relevant news events, and overall economy. If you have any questions about this kind of stuff, leave them down in the comments. I'm always happy to answer. In our videos, we focus on the facts. That means no BS, no hype, no emotion, pure raw TA. If that is the kind of content you're interested in, join us on Telegram as well. It is the second link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency and Bitcoin. If you're interested in trading, you can join our trading channel. This is our VIP group. We have over 600 members. You can see every trade we post has exact entries, exact targets, exact stop losses, and justification, including analysis for our trades. You can find our entire trading track record in the free channel. Head to the pinned comments, click the link to find more information, and of course you'll get access to our main VIP group where we post all our trades and our group chats of all of our members in there discussing, learning, and trading on a daily basis. Let's go ahead guys and jump into the video because we do have quite a fair bit to discuss today since we're really zooming out to that higher time frame. Starting on the market data, we're about 20 days through July, so about 10 days remaining. Currently, Bitcoin is down 1.58%. Not too concerning, not really a big deal so far. Looking at 24-hour volume, it is dropping down to 64 billion, down to around 8.45% in the red for that 24-hour period. Looking at liquidations, we're down 26%, sitting at 54 million. Taking a look further at those liquidations, we can see we do have a very even split between longs and shorts. This is quite representative of a sideways chop, and when we do see liquidations so evenly spread between longs and shorts, we can say with a degree of certainty the price action has not really done that much. And we can see now, look at the price action for the last 24 hours, we really haven't seen too much more than a little bit of sideways price action while Bitcoin attempts to either find support at this 29.8k level or fail to hold above that 29.8, which will result in a correction and a move toward the downside. Moving on from there, let's go ahead and take a look at some recent news developments in the cryptocurrency space, as we have seen some more information about the ETFs being filing, and we have heard recently that these ETF applications have now been added to the Federal Register, which means they are imminent approval or disapproval that should occur relatively soon. We're not expecting a day, we're not expecting a week, but maybe a couple days, a couple weeks, maybe a month or so is the general time frame we can expect a result for these. Of course, if the ETFs get approved, this will be bullish for cryptocurrency. If they get disproved, that is going to be very bearish. Looking at the price action, guys, for the DXY, we can see the DXY found some temporary support at that 99 level support. We bounced a little bit overnight and we have since corrected a small amount. Until then, this level is still support, and we do expect the price to do not really too much besides chop between our upper resistance and lower support until we do find out the result of the interest rate hike. We have a potential interest rate hike coming up very soon. This is going to be the end of the month. We're looking at the 27th and 26th, depending on where you are in the world. We can see that the overall projected interest rate is around 0.25%. So we're actually expecting a small hike. And of course, if that does actually come into play and we do see the hike, that is going to be generally bearish for stocks and cryptocurrency, and actually will push the DXY upwards. So we do have to take in consideration the overall drivers of price action, because when we're looking at price charts, the technical indicators and the price action itself, well, the technical indicators are derivatives of price action, and we look at price action, particularly macro direction, that is a result of macro drivers. And those macro drivers are part and a few, of course, interest rates, economic policy, monetary policy, taxation policy, public perspective. We saw how Bitcoin rallied when the banks were failing. That was highly due to public perspective. People saw it as a hedge against the current markets, the current financial system. So a lot of these things do impact price action, and we're looking at what impacts price action the most. Well, of course, interest rates directly influence the cost of debt, and the cost of debt directly influences investors' risk appetite, and therefore will impact the overall direction and short-term price action of assets, particularly in the cryptocurrency and stock market. So very important stuff coming up very soon to get into that. Looking at the overall stock market, guys, we can see we have seen a little bit of a move upwards over its resistance. Again, we do need to see a weekly close above here to actually confirm the invalidation. Until then, this should be deemed as deviation. Looking at the Dow Jones, we're looking like a nice little move upwards, of course. We are retesting this level of resistance over here that we do need to break above. This is a pretty key psychological level at 35,000. Again, not really anticipating too much, and I don't really want to take anything over here too seriously until those interest rates do come out. Again, we have been bullish on the S&P 500, and we have been bullish on the Dow Jones ever since October, November in 2022, all the way around these levels over here respectively, and these levels over here respectively, as we were bullish on Bitcoin all the way back when we broke out of our downtrending resistance, all the way back, where was it? Over here. We saw this breakout in January. We were accumulating this whole period in November and December, and we even accumulated back over here in June at 18,000. Let's go ahead and take a look, guys, and ignore this stuff over here. This was just some demonstrations before. It holds no relevance to today's video. Let's go ahead and dive into Bitcoin, as there is a lot to discuss. I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 US in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening. And first and foremost, I want to talk about this chart over here. This isn't a chart I've shown anyone really on YouTube yet, and actually is actually something I've really stumbled across in today's video. And this represents not only the date range trend for a 4-year cycle, but how momentum and particularly our RSI is showing us the validity of these ranges. In particular, the shifts between macro downtrends and reversals, and then into macro uptrends. And we're using momentum now to suggest that. If we take a look at our RSI, which is the bottom, we can see our key ranges. The red ranges is of course going to be our bear market and reversal range. The reversal range in the bear market is this gray level. So we have the gray level and the red level. In this instance, we have kind of combined the two. We have both of those in that same category. This is the bear market start. So when we have the momentum shift in the bear market, this of course is when we have the overall uptrend, the bull market, and then we have a momentum shift, a negative momentum shift over here, the breakdown of the 62 point on the RSI. That of course represents a negative momentum shift, and we enter this overall downtrend until we see a further break above that same point on the RSI, the 62 on the RSI again on the weekly chart, representing a positive shift, and we continue upwards to see this overall up trajectory continue until a later date. So first and foremost, we have to understand why 62 on the RSI is so significant. If we look at the current price action, we see every time we generally break above on the weekly chart of the 62 on the RSI, we see a strong move up. Every time we break below the 62 on the RSI, we see a strong move down. We see it over here once more in September. We can see a breakdown over here again. We move down. We can even see it as recently as March 2023. We broke up from this level. We saw a nice 20% move upwards. We broke down from that level. We saw a nice 15-16% move toward the downside. So on a smaller time frame and a higher time frame, it holds a degree of significance as it represents a high time frame shift in momentum. If we're taking a look at what we've seen prior and we take a look at what we're seeing now, we have seen a very similar scenario. We had a entrance of the bear market. We have a negative shift on the weekly chart of momentum. We hold under that same level, okay, that 62-point level for an extended period of time until we finally break above that 62 level on the RSI on the weekly chart, and that is when we enter a new bull market. The bull market continues upwards, or the high time frame uptrend eventually develops into a bull market until finally we reach our local top, okay, our bull market high. We break back under, we lose that 62 on the RSI again, we enter this overall downtrend. Again, the downtrend lasts, it lasts until we break back above the 62 on the RSI, and then we enter another high time frame uptrend. Again, uptrends aren't just permanently up. We can go down. We saw the COVID crash. We saw consolidation, but the overall momentum has flipped upwards. And then we take a look at the prior cycle of the current one. A similar thing. We printed our overall top. We corrected. We lost the 62 on the RSI. We stayed underneath the 62 on the RSI all the way until we reached March 2023. And then we broke above that 62 on the RSI. And if we have seen anything that to come that will follow what we've seen before, we can expect now the overall trajectory to be up for Bitcoin. So this chart over here represents a shift in momentum, a strong shift in momentum on the weekly chart, which is again what we've seen in the prior cycles. It is repeating itself. If we go a step further and apply our Gaussian channel, we can take a look at this, and this is very interesting. Every time we break a weekly candle above the Gaussian channel, we end up seeing an upward continuation to a particular point on the macro chart. We're going to bring up the monthly chart on the left and the Gaussian channel weekly on the right. If we take a look at this instance back in 2015 and our instance over here, 2015, our monthly and our weekly, we saw a break above the Gaussian channel around about the same time we broke above that yearly long horizontal resistance that provided the base of support in the bear run and the trigger point for the bullish macro shift in direction for the reversal period of that cycle. When we broke above a weekly chart on that Gaussian channel, we saw a continuation upwards to retest our dotted trend line, which was this point over here. That dotted trend line being the first high of the dead cat bounce after the bull run top. So the high after dead cat bounce of the bull run top. We saw a retest of a level and then we rejected. If we move upwards to the 2018 and 2019 scenario, we can see a similar thing happened. We broke out of the Gaussian channel weekly chart around about the same time we broke that yearly long resistance. Okay, where did we go from there? We went all the way up to retest that dead cat bounce high of the prior cycle, that prior top right over here, the dotted trend line. And then we rejected. Awesome. If we take a look at the current cycle, we're seeing the same thing to some degree play out. We've had the RSI shift. We've had the weekly Gaussian channel breakout. We've had the breakout of the $30,000 range. If the weekly charts continue upwards, if the price continues upwards, what we would expect would be the price to continue up to 48,000. That would be the bullish target for Bitcoin. Now, here is the thing. As I said at the start of the video, price action is not random. It is not predictable, okay? It is completely driven through major macroeconomic, political, social situations, factors, elements, whatever you want to call it. There are drivers of price action that push the price action. If these drivers turn bearish, it doesn't matter what the charts are suggesting. It doesn't matter how bullish this stuff looks, the price will move downward. So there are risks in terms of this. If there was no risk, we'd all go all in and just hope for the best. But there are risks still. And that major risk is the shape and situation of the economy that we are at the moment. With inflation still relatively high and interest rates potentially going back up, this could put Bitcoin in a situation where we actually see the pattern that we have seen prior break. Now, we need to talk about when will that occur? How can we identify a shift in weakness on the weekly charts that will be alarming to the point of which we haven't seen prior that could suggest a continuation down? So what we haven't seen before is on the weekly chart, every single time we're broken above this Gaussian channel, we have remained above the upper band of the Gaussian channel, which is this upper red line, until we have reached the dotted trend line. Okay, therefore, if we lose a weekly candle below the upper band of the Gaussian channel, that would be significant in shifting the overall weekly direction. That would change the direction from a strong weekly uptrend into a weak weekly downtrend. That would be catastrophic. That could result in a continuation downwards. For that to occur, we would need to lose our current horizontal range. So that is one thing we're looking for the bears to take control. We are looking for that breakdown. If we zoom out to a higher time frame, the bulls technically have control while the price remains above our overall uptrending support level. This uptrending diagonal support represents the overall uptrend of the current price structure. If we come back down and retest this level, that could be very damaging for Bitcoin, because if we lose this level, we could definitely continue toward the downside. If we remain above this 400-day long support, we have weekly strength, okay? The direction changes below this level, we enter a downtrend, but we have weekly strength above this level, meaning we could enter a downtrend and still bounce from here. That is very possible. If we lose 24.4 to 25.2, that is when we enter a new high time frame, not a weekly, not a daily, a high time frame downtrend. For that to occur, we need to see levels of support that are significant be destroyed. And for that to occur, we need to see the climate for risk assets shift. And for that to occur, we need to see interest rates rise and inflation back on the rise. So keep your eyes on all of that stuff, which is very important. We have to identify what is going on. On the flip side, like I said, if we start breaking upwards, if we break out of this horizontal range upwards, if we get back above 32,000, if we close a monthly candle back above 30,000 and validate 30,000 support, the direction is going to be remaining strong, and the direction is strong. What we are seeing right now is weakness at resistance. The weekly charts are strong, the daily charts are strong, the overall direction is strong, but we are coming up and retesting a major trigger point, and an area of which, if we're going to see a rejection and a reversal in the direction of the weekly chart, this is where it could occur from. Let's discuss this range. This range is a range we have been in now for around about 28 days. It's a pain in the ass. It's genuinely a pain in the ass. It's been an absolute blessing to trade. It's been a lot of fun swing trading this, scalp trading this, but in terms of the overall price action, it's been relatively boring, right? And not a lot is going on. A lot of people are getting very sick and tired of it, and that's understandable. This has been a relatively long horizontal consolidation. In fact, this has been probably the longest chop zone we have seen on Bitcoin for quite some time, for a few months. Looking at the range, we have to identify a few key points. Number one, our higher and lower resistances. This is our upper range here and our lower range. This is our major support level, major support being a bearish trigger, and our major resistance level being a bullish trigger, meaning when broken, we expect volatile moves in those directions. We had a volatile move above. This was due to the XRP news. We had a volatile move below, which got cut short as the information regarding these ETFs actually got released 8 minutes after the price plummeted to 29.5K. Call it manipulation, call it weird timing, whatever you want to call it. Obviously, there is some exposure at this level, and the big players are trying to hold the price at these levels. But the news events follow decision. It is not random. It is all planned. Everything is planned out. So looking at these ranges, guys, if we do lose this level, we can expect a strong correction down. The strong correction down could take us to 28.4K. If we lose 28.4K, that is when we enter a daily bearish trend. Why do we enter a daily bearish trend? Well, 28.4k is the upper band of the Gaussian channel. No surprise there. So for us to lose 28.4k, that puts us at risk of a continuation downwards, which will take us towards this uptrending support line. Actually, I will go as far as to say, if we lose 28.4k, there is a significantly high chance we come down and retest this uptrend. As if we take a look at the Gaussian channel, every time we break from the top side down, we enter through it. This is something we have seen 9 out of the 11 times. It is highly probable if we break from the upside into the Gaussian channel, we continue through it, and that could result in a correction on the higher time frame. So this level of support is significant to prevent us entering a daily bearish trend. On the flip side, our short-term resistance at 32k needs to be broken above. If we close a monthly candle above, fantastic. We will most likely continue into a macro bullish trend. So there is not much to say about this level that has not already been said. We've been covering it for a very long time. What we can talk about is our metrics. And one of the key ones I want to take a look at over here is going to be the RSI. The RSI over here is representing some degree of consolidation on the charts. If the RSI is able to break above this downtrending resistance, it would invalidate, okay, the prior bearish divergence we did have, and the bearish divergence have quote unquote played out, as we have seen the bearish divergence and we have seen the price retrace towards our next major area of liquidity. So this level now is going to be a level of resistance for the RSI, and by resistance I mean a point of which the momentum would shift positive. Right now we have bearish momentum. If we break through this level, that would turn momentum positive. We have a positive momentum, we have positive speed, we have positive velocity. If we have positive momentum, we're likely to have positive volume. If we have positive volume, positive momentum, we're likely to have positive price strength. If we have positive price strength, we're more likely to continue upwards. So we are watching for that. Until then, we do still expect the price to move toward the downside. It is more likely we move towards the downside after deviation toward the upside, but I will not be hedging too aggressively into shorts right now, as support is support until it is not. If you are in the VIP channel, you would have caught this short at the perfect opportunity. If you take a look over here, we shorted Bitcoin right at the top. Absolutely fantastic short. Over 167% profit on that so far. But as I know, support is supported to us not. We're looking for bounces now at this level. A lot of people are getting into late shorts. We're seeing that happen. We're seeing the data suggest it. We're seeing the overall open interest fall. We're seeing the volume fall. People are starting to late short, and those shorts are going to start building. And if we do lose this level, they will absolutely print. But if we do bounce, we could see a short squeeze upwards. Again, for the bullish price action to resume on a smaller time frame, we're looking for the price to break above our POC level at 30,260, and more importantly, these local high points right over here. We can see prior, these high points acted as resistance. We broke above, we shot upwards. We're looking for that same high point again. 30,430 is a trigger for a move upwards. Thanks for watching. I hope you enjoyed. I hope you learned something, and I'll catch you in the next one. Cheers.